Hey everyone, lumber prices are crashing again, and that could have huge implications for the biggest home improvement retailer, Home Depot. In this video, I'm going to share with you the specific price decline for lumber, and I'm going to share with you what that will mean for Home Depot and Home Depot stock investors. I'll also update my recommendation for Home Depot stock and let you know if I think the stock is a buy, hold, or a sell. But more importantly, this video will focus on the implications from changing lumber prices. So let's dig into the detail.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
All right, so here I have the chart pulled up from tradingeconomics.com, and they highlight that lumber prices per 1,000 board feet are down from around $625 in March all the way down to $454 today, a significant price decline. Now, lumber prices have been volatile ever since the onset of the pandemic. They fluctuated up and down based on the surprising changes in consumer behavior. At the onset of the pandemic, businesses thought that people would spend less money, and so they pulled back on lumber production, and that shortage created a surge in prices as people surprisingly built up home improvement needs and spent great deals of money on home improvement during the pandemic. Now, as economies have reopened, consumer behavior has shifted again, and that change has created a decrease in pricing for lumber, as you see here, down to $454 per 1,000 board feet. Now, to understand what this could mean for Home Depot and Home Depot stock investors specifically, I wrote an article for the Motley Fool a couple of years ago discussing Home Depot management and their policy regarding changes in lumber prices. So management at that time said that when it comes to pricing goods, we always have a philosophy that we want to lead the market down and lag going up. So what that means is that Home Depot absorbs higher prices for a while before passing them along to customers and drops prices soon after commodity prices decrease. In other words, Home Depot is willing to take a hit on profit margins to provide this customer-friendly pricing. Now, in the short term, that might hurt profit margins, but the policy might gain customer loyalty over the long term, but hurts profit margins during volatile price changes like we're seeing in recent months. So Home Depot gaining customer loyalty by not changing prices so frequently when they move up, but when prices move down, Home Depot is quick to lower prices for customers. Interestingly, in its latest quarter, which ended April 28th, Home Depot reported 386.8 million customer transactions, which was down 1% from the same quarter the prior year. Now, the average amount spent also decreased by 1.3% year over year, and combined, that had the impact of lowering Home Depot's sales per square foot by 3.4% year over year. So now, with the lower lumber prices, this could have the impact of customers saying, you know what, that project that we were putting off, it might make sense now that lumber prices are down over the last couple of months. So let's go back to Home Depot and let's consider that project. And remember, when you start a new project, let's say you're building a new room, you're not just buying lumber. You're buying lumber, drywall, you're buying framing nails, you might buy other things associated with that product. And so that benefits Home Depot significantly if you start a new project, because you're buying incremental things on the side, not just the lumber for the project. So by Home Depot lowering prices on lumber makes people want to take on that new project. And then by taking on that new project, Home Depot benefits because you visit the store more often, right? If you're anything like me, when you start a project, it's not just one visit to Home Depot. Between the beginning and end of the project, it might be a dozen or 2 dozen visits to Home Depot, depending on the size of the project. So anytime a new project is implemented or a new project is decided on by a customer, that's a big benefit to Home Depot. So one of the implications of these lower prices for lumber is going to be customers that were putting off certain projects now decide, okay, we're going to do this project because prices are much lower. And so it makes the project much more affordable than it was just a couple of months ago. Now, looking at Home Depot stock specifically in terms of valuation, Home Depot is trading at a forward price to earnings ratio of 20, which has been at the lower end of its valuation over the last few years. Remember, in the beginning of the video, I talked about rapidly changing consumer behavior. During the pandemic, people were spending way more than usual on home improvement. And so that year to 3 years where people spent more than usual on home improvement while they were at home created a bit of a gap now that economies reopened, right? If you already painted your house in 2020 and 2021, you're probably not going to paint again for several years. If you already added a new room, you're probably not going to add another room for several years. If you did a bathroom remodel, a kitchen remodel, those are long-lasting projects. You're not going to do another one for several years. So the surge in home improvement during 2020 and 2021 is creating a bit of a pocket now in 2024. As I shared with you earlier, Home Depot sales, customer transactions, sales per square foot, all down year over year in the latest quarter. So you're noticing that pocket of demand. However, longer term, people are going to spend money on home improvement. It's not an option. It's more of a necessity. Things get old, they break down, they need updating, they need maintenance. And so you've got to go into Home Depot or another home improvement store and fix up your home. So longer term, that market opportunity is massive. Nearly $1 trillion gets spent annually on home improvement, and Home Depot is the biggest player in that market. So I like Home Depot. Its prospects are solid, especially if you consider household formation. It's been going better than expected. 2 million households were formed in the latest period, and you can see the big change during the pandemic. There was initially a huge surge in household formation. More than 4 million new households were formed right after the onset of the pandemic. You might ask, why was that the case? Well, younger households and many other households, lower income households, were supported with all of the government stimulus, and that helped, for, let's say you need a 2-month deposit to get a new apartment, or you needed a down payment to buy a house. Well, now with all that stimulus money coming in, that helped build consumer balance sheets, which made it easier to start and move out of wherever you were. Maybe you were moving out of your parents' house. Maybe you were a multifamily household, and now you moved out to create your own household. All of that was helpful. And then there was the big decrease in household formation in the year and a half following the surge because prices absolutely exploded. You'll remember how rent increased in 2021, in 2022, and how house prices increased as well. And so household formation pulled back slightly as a result of those surging prices. But it's stabilized now at around 2 million new households formed annually, and that is higher than the average rate before the pandemic in 2020 and before. You'll notice that fewer periods of more than 2 million new households were created. Of course, new household formation is good news for Home Depot because when you move into a new house, you're probably going to fix it up the way that you want it. You're going to want to change a few things, maybe replace the toilets, maybe do a kitchen remodel, etc. And that's all good news. So longer term, I like Home Depot, and I have Home Depot stock rated not only as a buy, but I have it rated as one of my top 25 stocks to buy and one of my top 10 dividend stocks to buy. And I've kept it on this list pretty much all year long. Before I let you go, let me tell you about the greatest deal on YouTube. With just a click of a button, you can get free financial analysis from a professor with decades of investing experience. So what are you waiting for? Hit that subscribe button, and I'll see you again soon.